The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We found more good strength in the wheat market on the day. Wednesday, corn, beans, relatively mixed. Livestock trade saw some impressive support as well. And we have plenty of various factors around the world and here at home that are playing a role in some of these market moves as we are getting into the month of October. Let's talk about it. Joining us for a conversation, Mike Zuzolo with Global Commodity Analytics is with us here today. Mike, good to catch up with you again. How are you?
Doing great, Jesse. The wheat's the leader. How can I be bad?
I was going to say, you have to be happy seeing wheat as the leader. We talk about that quite a bit between you and I here on the show. And, as I kind of frame that up, there's a lot of issues going on that we should probably be touching on here on Wednesday's show. And I know we can really kind of frame this up here today and kick off the month of October. But I guess big overarching theme for you here today. I mean, so much going on. How do we sift through it all, Mike?
I think the port strike can't be classified as anything but increasingly price negative as we go forward if it lasts. I'm not sure the trade has really dealt with that. I don't think they have, in fact, and what they I think instead have done, and you see this in the hog market especially, I think we're now trading and pricing in lost production and supply of poultry and pork and animals in the heart of the poultry and hog sector of the United States. One of with North Carolina, I think is number 3 right now in the states for hog production, pork production. Mm-hmm. I can't remember. Virginia, I believe, is number 1, or Delaware is number 1 in poultry. But I think we're looking at the tightening of supplies right now of meats when it comes to Helene's damage, and therefore not thinking about the port strike as much. And that really is something we have to remember as we get deeper into October if it lasts, especially if we're still talking about this around Thanksgiving. So putting that aside for just a second, I think you have the Chinese stimulus with the Hong Kong market about 40% off its August lows as of this week, and hitting its best price level since January 2023 this week, and now testing the 200-month moving average for the first time in about 15 months, if I remember right, Jesse. The Chinese stimulus has ignited the financial mindset of the commodity investors via the copper. We didn't have the crude oil until the Middle East came in. And so then the Middle East reared its head at the beginning of this week, and all of a sudden the crude oil woke up. And those are the two major drivers we've talked about when it comes to the wheat. And so I think between the Chinese change in their policy and moving to stimulate their economy, coupled with the reality finally setting in that we don't have supplies like we thought we did, or the general trade thought they did, in the Black Sea and in Australia and in the United States and probably in Argentina when it comes to wheat and corn, all of a sudden these things converged finally, and we've been waiting and waiting and waiting. So I'm happy, you're right, but it's more relief than anything that we're getting back into true fundamentals instead of kind of stupid trade biases that the funds have been in control of.
I want to pick some of this apart with you here, those main key factors you talked about, and let's stick with the port strike here real quick. You sent me a grain export inspections chart, and from what I understand, a lot of this is containerized shipments and containerized ag shipments, maybe not necessarily bulk corn, for instance, or things like that. I mean, what have you heard in terms of this port strike and some of the impacts to agriculture, Mike?
Yeah, I think that's right for the most part. My concern is that eventually it could spill over into the ag sector and the export market. But you bring up a huge point that I think we really need to divert our attention. We know that in 2023, USDA told us that containers were about 14% of the U.S. waterborne grain exports. 90% of that 14% went to Asia. So it hurts. It's not helpful. I think what really hurts us, though, Jesse, is the idea, and this chart doesn't really show it because it is export, and we see clearly that the Mississippi Gulf is the king of the export market for grains, and then followed by the Pacific Northwest, followed by Texas. So, yeah, we could shift a little bit to the Pacific Northwest if we needed to, but not a lot. But the key point for me goes back to the poultry, goes back to the pork, goes back to the beef. Around $18 billion of beef and pork sales and exports were shipped out of here last year, based upon one of the people that talked from the United Nations, the U.S. ambassador, former U.S. ambassador to the United Nations, spoke about this a couple days ago. And so if we stop with our beef and pork exports, and they are containerized, then also we can't cull the poultry on the East Coast because it has nowhere to go. I began to get much more concerned and worried about the demand for the livestock feed, the soy meal, the corn, anything that is related to the compound feed that goes into hogs and chickens and dairy to a lesser degree. And you have to think about the ethanol and biofuel market as well. That's why I think that my timeline is Thanksgiving. If we can get through this issue with the port strike by Thanksgiving, I don't think we have to do a lot of material damage to the supply demand fundamentals. But if we're dealing with this in the holidays, not only do I think we could have a recession that could negatively impact us from an investor standpoint, especially if the crude oil starts to shoot higher, we'll probably go into a recession. Essentially, what I'm saying is we'll pay the price down the road somewhere if this thing continues on.
Let's talk the Bloomberg Commodity Index with us starting the month of October. Good for us to revisit this, and we take a look at this quite often. And I think this could maybe be where we bring in that Chinese stimulus conversation a little bit, as we've been seeing some more export business to China from the U.S., et cetera, et cetera. But thinking about that, looking at the Bloomberg Index, what's the latest you're seeing right now, Mike?
Yeah, this chart is bringing back around to a pennant that we broke lower prematurely. And that's kind of the mindset I had when I said kind of the stupid biases that really didn't matter in the world because we had all these looming issues and gray rhino things that we knew that could happen. But the trade bet the wrong way and bet on the idea that it was not going to happen. Now, a bunch of things have happened, and now we're back to that pennant. The stochastic oscillator down at the bottom is suggesting to me on this weekly chart that we are generating a buy signal, meaning there's more likelihood of new buyers than new sellers potentially coming in here. I think this goes back to the commodity index as a whole. The energies are such a large influence on most commodity indices, Jesse. And it's important to realize the crude oil market is the heart and soul of many rallies, if not a key supporting feature to many grain and agriculture rallies. Now, I'm not taking anything away from the fact that the Ukrainian wheat price jumped $9 a ton, that one of the major Russian wheat lobbies is asking for Russia to cut back on their exports because of supplies, because of this terrific drought that we've known about for 3 months. And the corn market in the Ukraine, its actual price is hitting now a 17-month high. And we'll talk about that here more in a minute. But there are individual drought supply related features and good demand in terms of, some surprise corn sales, some surprise bean sales. They're out there. But I think the heart and soul of a major low has always been the crude oil market and the copper market helping the wheat market. And that's why this chart's so important to me.
Well, and thinking about this, Mike, you mentioned some of the drought issues too, and that's definitely a big concern in Russia and other parts of the world that I think is really starting to get underscored more at this point.
I think it is because, Jesse, we knew that we had the lowest world wheat stocks to use levels in 10 years. We knew that we had the lowest world corn stocks to use levels in 9, and now stocks to use levels, stocks levels in 9, 10 years. And so the trade knew that they couldn't take any positive price drouthy issues very well, but they just kept trying to play the idea that the market was going to keep going lower in the commodities because of China's recession, and the crude oil market really reflected that more than anything.
We are talking today with Mike Zuzolo from Global Commodity Analytics here on Market Talk. Mike, let's take a look over at the daily crude continuation chart. And you mentioned crude oil earlier, and I think this is another piece we need to bring in here with the Middle East escalations and more. So talk about this chart and tie this in with the wheat and more. What are you watching here?
I kind of made this chart look the way it does by expanding it and making sure I showed the two downtrending price channels in orange, one at the very beginning of the chart, one that we're in right now, Jesse, because right in the middle of the chart is what I would call the top of the low demand channel. So if we're in a weak world economy, poor demand for commodities and energies, then the top of the market is around 72.75. And you can see that line cut across ever since November of last year. And it does capture a lot of the support levels in that chart. When it goes below that level on a closing basis, it stays below that level for quite some time, around a month or so. We saw it in December of last year. And then by the time we got to mid-January of last year, we were breaking out and ended up going up to around that $86, $87 a barrel level in March, April. Now we're back into that same type of channel, testing that low demand 72.75 line, and also testing the downtrending channel line in orange. And so my take is pretty simple at this point with the fundamentals you and I are talking about. If you take the 72.75 level out on a weekly close, then we can go, I think, up to the the daily close. We can go up to the 100-day moving average, I think, of about 76.30. That's that white line. You get above that, and then the next stopping point is the low to mid 80s. And so that's what that chart suggests to me, because it's kind of the right time seasonally. And we talked about that last week, I believe, about the low stocks and how seasonally we come out of the hole. And this kind of news, and it sounds like Iran really stepped in it with Israel, and Israel's going to come back, and they're talking about hitting the oil areas of Iran, the refineries of Iran, and Iranians are buying petrol right now. I just saw that right before you and I got on the air here from one of my European subscriptions. Iranians are queuing up in the petrol lines right now.
It's very interesting to look at all these factors, looking at crude with the Middle East, looking at China stimulus, looking at the port strike and everything else. And I think about wheat. You talk about it being the upside leader here. Corn hasn't moved a lot. We set a new high in D scored, I believe, 434 and change, and not able to get through that to the top side yet. Let's look at world corn prices here. I mean, you mentioned the Ukraine price earlier. Weave that in here. I mean, what are we looking at with corn? Why is corn not getting a bullish breakout?
Well, I think it's about the wheat right now, and then it'll become about the corn, because we are, after all, still in corn harvest. And that was a major influence on why I said in my analysis that this has got to be about the wheat, because we're in row crop harvest in the northern hemisphere and row crop planting in the southern hemisphere. And so I really think it's about the wheat, and the wheat is laying the seed bed for the corn market right now. And this chart really supports the corn substantially. The U.S. corn price at around 195, 198 really has not moved much at all in the last couple weeks, partly because of the currency, partly because of, as you say, it's been gradually going up. Now, I have talked to and called a lot of clients this week, Jesse, and said, look, we're back up where we were during July 4th holiday. We're back up where we were during the June stocks report. Let's not forget that this market is rallying, and we got to be careful not to miss the train, because this is still mainly weather and supply driven. But what I love about this chart, other than what you mentioned, the Ukrainian price, what we talked about earlier, is the fact that we're really starting to see the Brazilian price scoot. I mean, that big sharp move up in the orange line, that's just happened in the last 2 weeks. And we've essentially gone from about $205 a ton to about $218 a ton. We're really starting to scoot up and build a premium in Brazil. That's what we need to suggest that, okay, the Brazilian farmers are nervous. They don't think they're going to get planted in the corn. They're holding old crop corn supplies. and I found it very interesting, and this will be something very key in the next few days. Algeria, we talk about the New East, New West, and the trade frictions and these trade blocks that are setting up. Algeria comes in, tenders for, I think, 320,000 tons of corn, which in and of itself is odd. They tender for 320,000 tons of corn, and they only want South American corn. And so I'm sitting back and I'm watching to see, will South America fill that order, and at what price? Or will they say, sorry, go someplace else until our drought's over with? We don't want to sell anything, and we can't sell anything right now when it comes to corn. I doubt that's going to happen, but I think it's interesting that we want to keep track of this, because this price boom to the upside in corn in Brazil is really critical. And we already had a big move in the Romanian price, which is the purplish line, and then up the Argentina upriver price also been scooting up as well. So we are right with Ukraine, and we are the cheapest corn price in the world right now. So this is a nice place to be in, given the fact that the wheat's leading us higher.
Appreciate the insight on that. That's really, really good stuff to think about. We should touch on the world soy prices as well. If we're talking world corn prices, what are you seeing on the world soy chart right now, Mike?
Yeah, I mean, I'm not trying to talk down the beans, but I really have felt like that the beans, they have a burdensome world soybean supply. We know that we're getting probably some lighter yields, even though a private trade guest came out yesterday and said, no, we're going to take the bean yield up. I think the problem with the beans right now, and this chart partially reflects it, is we're starting to see the Brazilian and Argentine prices curl down. Now, that's not a trend, but it's something to watch. It's different than what we're seeing in the corn, number one. Number two is the hard red wheat and the corn, I think, are the leaders in this market right now. Soft red right there with the hard red, but the drought in the wheat, the hard red drought in particular here in this country, I think these are the key things to be watching, because, again, that wheat and crude oil relationship. I noticed today that the hard red wheat and corn both tested their 52-week moving averages. I think the hard red was able to get above it. I didn't check after the close, but we're up against some really key levels on wheat and corn. What I'm getting at is, can they break above these resistance levels and help pull the soybeans higher into late October, especially given a WASDE report right around the corner?
Very true. And that WASDE report coming up real quick. Let's go to livestock, Mike. Monthly live cattle continuation chart. We'll pull that up on our video feed here today. Really strong day in futures for cattle and for hogs on Wednesday. And you kind of touched on some of the reasoning maybe in the hog market earlier. What's your thoughts, though, as you're looking at this cattle trade right now?
Well, we're testing the August highs in the fats, and the feeders are tracking right with it. And so we haven't seen any kind of negative reaction in what we're dealing with the port strike yet, as we talked about. We haven't seen any negative reaction in Wall Street either, Jesse. And I think that's where the canary in the coal mine for me, as far as when does the energy price get high enough, and when and how long does the port strike need to go to make it both those things make it painful on Wall Street. And that's where live cattle, and I think with the corn market, that's where feeder cattle, those two are my canaries in the coal mine at this point. Because if we lose the Wall Street because of energy prices going higher, and we start to see the meat prices then give way, then we got to start thinking, okay, maybe the rest of agriculture is going to get caught up in this mess. So that's kind of where I'm laying out right now. So same old thing with me, different day. Hedge rallies in cattle and feeders, especially with this hog market rallying so substantially, and the hog market rallying in part because of this Chinese stimulus. But I'm not getting any good news out of China right now when it comes to meat demand. They're under a major holiday right now. That's going to be extremely important in my analysis to give an idea of whether the hogs can keep supporting the cattle. The hogs and pigs report, to me, especially the heavyweight hogs, 180 plus, were not friendly, but the hogs and pigs report seemed like the market didn't mind it at all. And so I'm leaning towards selling rallies very hard, because I do think we're building premiums here.
And you mentioned the time with Wall Street. Here's one more chart real quick. Live cattle S&P correlation. I love when you send me this chart, Mike. I think this is a really neat one to take a look at and illustrate some of what you're looking at.
Yeah, S&P 500 live cattle futures, and on an 8-week basis, they're at a plus 77%. And notice that sharp increase in price action. that is your consumption in the cattle. And we can see it now on this chart, if you ask me.
Awesome stuff. Great analysis as always. I feel like we could probably go another 20, 30 minutes today, Mike. So much going on. If folks want to reach out to you and talk through marketing and take a look at some of your great work and more, how could they get in touch with you, sir?
Globalcomresearch.com is the best place to go right now, especially since you're so busy. There's a 2-week trial sign-up piece of information there, and then you can take a look at our toll-free number and take a look about us, and just surf around and take a look, see if there's not something that appeals to you.
Globalcomresearch.com. Mike Zuzolo, Global Commodity Analytics. Always good to have you on the show with us, sir. Thanks for being here. We'll talk to you next week.
Thanks, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.